D'abord, bonsoir and good evening to everybody. Je le dirai en français parce qu'on est à Paris. Et le français, c'est une langue qui me tient à cœur, donc voilà, même si je suis hollandaise, donc je parle volontairement français. D'abord, merci beaucoup à l'OCDE. Many thanks to the OECD et son secrétaire général Angel Gurria. Parce que c'est un moment important. It's a very important moment to do this launch, to signify the start of a new period, which is the 7th edition of the Global Prize. And it is with great pride that Paul Dembinski and myself, as co-presidents of the jury, sit here again and have a wonderful panel and a wonderful keynote awaiting us to discuss ethics and trust in finance, which is a subject close to all of us, even more so 10 years after the crisis. We've all seen this weekend with protests in front of the Brussels Stock Exchange, newspaper articles saying what is happening, things haven't changed. The litany is there, politicians saying the same thing. So where are we? What are we doing about it? Is there anything we can do about it? And I will go into it a little bit afterwards in some comments on the future of the industry. First of all, I would like to point out that the deadline for the new edition essays is the 31st of May 2019. There are many folders in the room and flyers, and we encourage all of you to help us and distribute information. The more essays we get, the more fruitful the discussions, the better the prize will be, and the more we'll get the whole subject debated about. So that really is an absolutely key issue. It is really a pleasure, together with the other strategic partners, Euroclear, SWIFT and SWIFT Institute, that we sponsor this prize. We're not the only ones. The other partners, OECD, ACCA, and RB, they are there too, and that is a very important point. There is always a growth of let's say, those partners coming in and growing up to more strategic partners. And this is an evolving issue. We need strategic partners. We need everyone coming in. The Observatoire de la Finance is a not-for-profit institute. They do it because Paul Dembinski has been at the very beginning in this prize. And here I would like to take a moment to pay homage to Robin Cosgrove. Without Robin Cosgrove, that young investment banker who one day spoke to his mother and said, there is something wrong with the industry. He was a very successful investment banker. And he really noted, he had this at his heart. And then he died very soon afterwards. And his mother, to pay homage to him and his whole family, dedicated a lot of their time and effort in setting up this prize. Carol Cosgrove, his mother, is still involved, albeit not in an active way, but it will do her great pleasure, and I hope she will watch some of the filming of this, to see that the prize is living on and that it's growing, and that this nurturing that she did for the last 10 years, together with Paul Dembinski, grew to this, where we sit today. We are trying to establish many different language chapters, parce que, comme vous savez, c'est très important, es muy importante de hablar todos los idiomas. It's not only English. Europe is very varied. Ik zeg het ook als een Nederlander. Het is belangrijk om uw taal te spreken. I don't speak German, so I can't do it in German. But it is very important, joking aside. The language issue is an important one. Obviously, English is lingua franca. My daughter would say Latin is lingua franca, but I don't think we can do essays in Latin, so let's forget that. However, there is a Polish chapter which has now, I think it's in its 7th edition also, and it's a really very well settled prize, and we can all take an example for that. This year we'll start with an Hispanic Iberoamericano prize, and also with a German prize, and we hope also to do the same in the French language. This is important because ethics, and Paul Dembinski has done research into this, ethics, you can only do so much in a language that is not your own. This is at the core core of our being. Ethics is really the core of us, and then it comes in your maternal language. So it is important that we give everybody the opportunity who might have a message to bring to say it in their own language. Obviously, we can't do all the languages of the world, but, well, who knows where we'll end up. You can help us in many ways. Disseminate the information, hosting, co-organizing debates, organizing debates. If you're a university with students, bringing some members of the jury, Paul and myself and other members of the jury are very willing to come and debate with students, with people, and I think this is really key. This, I would say the jury members, as well as the strategic partners, are all totally dedicated to the issue of ethics in finance, and you can feel that. And the enthusiasm at jury meetings is a joy to watch. Of course, you have to be under 35 years of age. So this is a key issue. But again, the young, the future is for the young. And, you know, it is, again, I quote my daughter often because I think she's a fount of wisdom at her tender age. But when I was talking about how I was mentioning, well, it's the age of sustainable finance and, you know, I'm speaking a lot on it, she said, okay, you're speaking, but are you doing anything? So this is it, right? Are we doing anything that is changing the industry to become for the good of society, which is what it's meant to be? And that really, and I hope also that Mathilde will, with her forthright address, will definitely address some of these issues. I look forward to that very much. And also in the round table, we have a very nice broad panel in the round table. Mr. Guillaume Eliette, Head of Regulatory Compliance and Public Affairs at Euroclear. Again, this is a key issue also for Euroclear, the transparency of the market. You know, transparency benefits everyone. Mr. Babatunde Onabayo, again, first prize winner. I interviewed him, and there is a video online, I hope, which you can watch, where he discusses in detail his prize. Key to show young people having a concern and wanting to say something about changing the industry from the inside. Pascal Sescon, great pleasure to have you here, Chief Ethics Officer of Banque de France. We need regulators. We need regulators and supervisors to help us. The industry needs to change, but also together in partnership with regulators and supervisors. Pierre Delozat, again, Association Française des Marchés Financiers. Very important to have the Association Française des Marchés, the market participants, the stakeholders from the inside, really giving their thoughts and trying to change what is wrong. And last but not least, of course, academia with José Luis Fernandez from Comillas Pontifical University. It was a great pleasure to meet you in Madrid and to see that you share so deeply the ethics concerns. You teach it, of course, at the university. And together we hope that with you the Spanish language edition will flourish. So great panel and great subject. I now will address some of my own comments to you. And I think it really... It's important. For me, 10 years after the crisis, in 2008, I was sitting in the European Parliament. I came into the European Parliament in 2005. When I came into the Parliament, I was an ex-banker, and a lot of MEPs said to me, banker, we don't trust you. I said, great, I'm supposed to be your expert. So that was a cautionary warning for me, and it took me 2 years to gain the trust of MEPs. And once I gained the trust, I could share their concerns. Politicians are not experts. Sometimes they are, but many times they're not. But I have seen in my time in the Parliament many MEPs who really do care to bring about a change in the industry. Now, there's been a lot of comments about all the regulation coming out of Europe, a tsunami of regulation, drowning the market, etc. But to my mind, it's not enough. To my mind, we still haven't achieved it. There's been a laudable effort to try and contain it. The problem is, if the industry from itself is trying to avoid the change, you can regulate all you want, but you will never change the industry. So we need a feeling from the inside to change, to change the behavioral patterns. The Dutch supervisor, the IFM in Holland, has been very interestingly working actively on changing behavior. They are going into groups of traders, of analysts, of whatever, different groups of people working in finance. And they observe their psychological profiles. And they see that if everyone has the same psychological profile, well, it's quite likely that an unethical behavior can permeate because there's no one to give checks and balances. When I came into the city in 1984, a long time ago already, there was still, my word is my bond. The board of the bank I worked with, they were partners, so they felt it in their pocket when they were losing some money. So they really decided, should we do this bond issue or not? They decided, and they actually knew what they were doing. And the team I worked with, I was a lawyer, there was a linguist, there was an art historian, there was a philosopher, not a single economist or master of finance. And we were doing new issues in bonds. And where I then was, 15 years later, finding myself in another major bank, this time between Holland and Brussels, and everyone I had to recruit in different teams of the dealing room had to have a master of finance, was an economist, and hence they all had their noses put in the same direction. And I think that is really a key issue. In a survey and a study we did together at CFA Institute with the Economist Intelligence Unit in 2013, the head of the HR Association in London said, we actually need to change everybody in finance. Point. That was him saying it, not anybody else. For those of you who were interested, a Dutch journalist called Joris Luijendijk wrote a series of blogs during his time down under into sort of the corridors of the city. During 2 years he worked for The Guardian. He published a book, it is available in English, and he did a series of interviews with people from sort of different sort of HR, frontline investment bankers, back office, risk management, etc., all in hidden away little cafes, but all to them, they showed this similar awareness that things were wrong, but they really didn't know how to change it. Now, at CFA Institute, we observe this, and of course our mission is to render finance for the good of society, reflecting what the Pope is saying. Finance should be for the benefit of society. And I'll come to a letter that came out of the Vatican recently. Clearly, you need to establish a sense of from the inside, but also an empowering. Babatunde and both the previous prize winner, Ross Murdoch from the FCA, noted that young people need to be empowered. They need to feel that if they see an unethical behavior, that they know A, what to do, B, who to go to. It is very difficult, and I have experienced this in my career, and I have given testimony to this, is that sometimes your immediate superior will not encourage you to behave ethically, because we are in a shareholder model. We have to pay obedience to the latest balance sheet to make sure that we're all performing in the right way. My bonus would depend on it. So where is the inclination to behave ethically and in a longer term? Finance has also had a very, very short-term vision. There is no long term. And it always struck me that we started off with such good intentions. We have the my word is my bond. We have gestionner un bon père de famille. So that is a good house father. Okay, so can we say this of our bankers? Can we say this of people in finance, that they are acting as good house fathers? It's difficult to act as a good house father if you don't feel it touches you. If you know that your bonus is going to be paid whatever you do. Well, that has to change. And that also has to change at the top. It has to change at the top that, you know, we don't give golden goodbyes and golden handshakes. If someone really has not behaved well, then it should be shown. in the European Parliament, directors who are in charge of doing offers outside, even for academic studies, if there's an unethical issue, they are personally financially liable. Why should that be just in the European Parliament? Why can't that be in a financial institution? So again, I think, you know, the essays we are reading in this prize have really struck me. And especially the last edition has been very, very interesting. Going from sort of contactless card payments to behavioral aspects to fintech. Fintech was a very live thread. And of course, artificial intelligence is a major challenge for the industry because it's very easy to hide behind a robot. You can always say it's the machine. Right? It's not me, it's the machine who did this. And I think this is really important. Let me quote something from the letter that came out of the Vatican several weeks ago. Whether you're Christian or not, you can admire the Vatican for having produced a letter really very pertinent on financial markets with details. And it was interesting because there have been comments from CEOs in the US on this letter, but at least it's created a debate. And for one, I'm very happy about that. So in the letter, what is quoted is a healthy financial system requires the maximum amount of information possible so that every agent can protect his or her interests in full and with complete freedom. So this is key, the freedom, the freedom to act in the best interest, to feel free as a young person, that you are free to act. And I think that is really important. And also what is really important is that at least until the very recent past, the practice of the economic financial system is often significantly based on a merely formal respect of the limits established by the law. So it's very easy to say, I am complying with the ethics code, but it goes beyond that. And Professor Mary Gentili, who's at Harvard and now in Virginia, is working with CFA Institute on what we call giving voice to value. And there we do case studies, bringing them out weekly, discuss webinars, we train people in the industry, and we show them how you act, and not just acknowledge the ethics code, but how it comes from the inside. And that is where we need to be. So it is really important. And lastly, before I give the floor to Mathilde and to the panel, especially as we also enter the era, which we've all seen amply discussed in the press, on sustainable finance. So, sustainable finance, this is the survival of the planet. Ethics is at the core of this. Sustainability, long-term, value. Again, if we're going to have to trust, and it's going to go back to trusting your financial advisor, that they will tell you this is right, this is sustainable, we have analyzed this. This is going to be important, this relationship of trust. So in my future world for finance, I see robotics having a great influence on cost, having a great influence on opportunities, but again, I will also see a role for the human being, because the human being is capable of switching in ways that robots cannot, and I don't think they will be. Again, it is for the new generation that we have to act. I want to be proud when I'm 80 years old and say I did something to change this industry. I hope you all will be proud too, and that we can distribute and make the world feel proud of its finance industry. Thank you. So, let me give the floor to Mathilde, and then Paul, do you want to change already? Okay. Okay, fine.
Thank you. I think you have done the keynote speech, so I could be very short. First, we are very pleased to welcome you at the OECD for this launch of the 7th edition of the Global Prize on Ethics and Finance. It's indeed a very critical topic. The timing could not be more relevant. You know, we are celebrating somehow the 10 years after the big crisis, and we had last week here at the OECD a big workshop on where do we stand 10 years after the crisis, and it was quite sobering, you know, to look at where the financial system really is now. I mean, we have made some progress, that's for sure, but there are still a lot of problems, and including ones related to ethics and finance. So yes, it's a very critical topic at a very relevant time. Our Secretary General, Angel Gurria, last year I understood that he did the keynote speech in January. So we are not stranger to your prize, and we share its goals, definitely. And we believe also at the OECD that business integrity and ethical conduct are the cornerstone of a sustainable, inclusive financial sector, one that serves, as you mentioned, making reference to the Pope's letter, one that serves real people and in real economy. So these beliefs are, like everything we try to do at the OECD, are evidence-based, and they are based on a lot of empirical research and data. So I will touch base 3 topics in my presentation. First, where do we stand? What is the trust deficit in finance? Secondly, why it's important? And third, what governments and business can do. But here I will focus really on what we do at the OECD to help governments, to help business progress in this area. So first, the persistent trust deficit in finance. So as I said, it's just 10 years after the collapse of Lehman Brothers and the peak of the financial crisis. And this crisis has brought a collapse in trust in public institutions in general, including in government and business. And it's very visible for all the data and the surveys that are around on the topic of trust. You have the Edelman Trust Barometer, the Gallup, etc. So, and also our own research at the OECD. Since the crisis, trust has a little bit improved. It's still much lower than it used to be before the crisis. And the momentum recently has stalled, and particularly trust in business. So it's a very critical issue to discuss. And the financial sector is the least trusted of any industry. Only 54% of the general population trust financial service providers do the right thing. So that's quite sobering number. Half of the population then does not trust the financial system. But it's not that surprising, even if it's sobering. So despite all these years of banking reforms that we have had since the last crisis, despite all the increased scrutiny faced by financial institutions, misconduct continues to shake the public's faith that finance has their best interest at heart. So we have seen a lot of big fines being levied on banks. In the last 10 years, like 345 billion in US dollars in fines, including 22 billion last year. But it's not enough, apparently. So we have seen in the last 2 years only high-profile breaches of trust in the financial sector, fresh revelations of institutionalized misconduct at Wells Fargo. I will mention just a few examples that you all know about. Prosecution of Dutch bank for laundering over 10 billion in Russian money. A failure of Equifax to keep the data of 150 million US consumers safe, etc. So we are very far from being there, 10 years after the crisis. And why it's important? Of course, like behaving ethically is the right thing to do, and I think I'm preaching to converted here, so from a moral and social standpoint. So if only that, but it's not the only reason. Also, it's the right thing to do in terms of business for the financial institutions. Ethical conduct and the trust it brings is important because it supports financial stability and financial inclusiveness. It also allows innovation to flourish, and it improves long-term business performance. So first, on financial stability. We have seen with the crisis the financial stability implications of misconduct, basically. There were many reasons for the crisis, and we have been discussing these reasons all over again in the last 10 years at the OECD. But, you know, at the core of it, there was definitely the widespread mis-selling of mortgages to people that could not afford them. And it was made worse by the inaccurate ratings given to these mortgage derivatives by rating agencies with conflicted interests. And then the mis-selling of derivatives themselves. So we have like a compilation of misconducts at the heart of this big crisis, really. And as the weaknesses in the financial system became evident, the lack of trust between banks saw also lending grind to a halt, to the detriment of households and businesses. So we have seen firsthand, and a big time, the effect misconduct and lack of trust have on financial flows and on financial stability. This is why this year the Financial Stability Board produced guidance on managing misconduct risk in financial institutions. So it's quite topical. Second, on innovation, and as you mentioned, the fintech, it's also something that we need to realize that trust is necessary for innovation. Digitalization and technological innovation, including blockchain, AI, as you mentioned, etc., they are driving competition, efficiency gains, new product offerings in the financial sector recently. I mean, that's a big thing happening. But as you said in your essay, many of these technologies require a leap of faith on the part of consumers, and they won't have this faith if they don't trust the financial institutions. So innovation sometimes pushed through under the assumption that business knows best. But given the recent history, it's fair to question this assumption these days. We have seen already the positive impact of fintech on people's life, particularly in terms of financial inclusion. With the big data analytics, we have high-quality, tailored robo-advice for investments, for pensions, etc. With mobile banking, you bring financial services to people who did not have access to it. With emerging blockchain innovations, you could, for example, cut the cost of the remittances. So this fintech, all these innovations, clearly they have the potential to be a powerful force for good in the financial sector, but they won't thrive if there is no trust. And last but not least, the effect of trust, ethics, and thus trust on business performance. Misconduct exposed financial businesses to costly penalties. We have seen that. There have been a lot of big fines. It's time records, but apparently it's not enough. And there are also a lot of reputational risks, which can cost a business its customers, its employees, and its investors also. And that might be the place where things will begin to change. When we consider the negative impact of poor business conduct on the financial system as a whole or on individual companies, no surprise at all that the evidence points to a very, very big fact. Good business conduct is good for business. It's just good business in the medium term, at least. Maybe not on the short term, as you mentioned, this pressure of short-term results. Every year at the OECD, we have what we call the OECD Business Finance Outlook. And last year, we had an empirical analysis presented in this Business and Finance Outlook, finding that business social score, that means its capacity to generate trust and loyalty with its workforce, customers, and society, was an overwhelming predictor of strong returns on equity and returns on assets. So we have more and more accumulated evidence that ethics is good for trust, that is good for business, at least in the medium term. That's always the tricky aspect of it. So what governments and business can do? We know that, good conduct and trust in finance is important. It's critical for sustainability, for inclusiveness, for innovation, and for business in general. And we know that we have a problem. There is a persistent gap that remains, and it's a big one. The only good news is that more and more people are dealing with this issue, and we have global standards that provide governments with kind of frameworks to act on that. At the OECD, that's what we do generally. We help governments act on many different things, including on this type of issues. So we have developed what we call instruments or standards to help governments maintain good and businesses maintain good organizational culture, prevent misconduct, and help build trust. On the side of governments, we have two main topics that we deal with: financial consumer protection and financial education. So financial consumer protection, because I guess a lot of you are also dealing with that, is critical to safeguarding participation of consumers, and it underpins trust and confidence in the financial system. We have what we call G20 OECD high-level principles on financial consumer protection. They provide a comprehensive framework for these financial protection regimes, ranging from the legal and regulatory settings, but as you said, that is the minimum, like just the minimum, the role of oversight bodies, fair treatment of consumers, responsible business conduct, to effective disclosure, transparency mechanisms, etc., data protection, competition, and access to redress mechanisms. Second, we work on financial education and financial literacy, because customers, they need to be able to understand the financial product available to them. They need to be able to choose and use them appropriately. It's a kind of a precondition for financial inclusion. So we collect data on financial education across the world, including through our, financial literacy element of PISA. PISA, it's our big, survey on what is the level of 15 years old in terms of usually education, general education, but we have also specific data on financial literacy. And we have also guidance for governments on how to develop national strategies for financial education. So taken together, these two work streams, like financial consumer protection and financial education, they tackle the demand and the supply side somehow of consumer financial products. They help build up financial resilience within households, enhance financial stability. They also help tackle the risk of misconduct to some point, and they help to ensure financial services are inclusive and support fair and balanced growth. But it's not enough. And because also, even if all the consumers are well educated, well aware, well protected, we still need businesses to behave appropriately. So we have also guidance for business, not always focusing, strictly speaking, on the financial businesses, but for business in general, but it is valid for business, financial business in particular. And in particular in two areas, corporate governance and responsible business conduct. So on corporate governance, we have the G20 OECD principle for corporate governance. It's a globally recognized standard on transparency, accountability, the role of boards, etc., business and integrity for public companies. We have also a kind of a sister or brother standard, which is corporate governance for state-owned enterprises. These standards, they have been adopted by the Financial Stability Board, so they are part of the big list of standards approved by the FSB. They recognize, of course, the role of corporate governance in good culture and good conduct. Importantly, we recognize that there is not one-size-fits-all approach to governance or to culture in general, which is that's why we focus also on the second area, that is responsible business conduct. And of course, this is a very broad term, responsible business conduct. It encompasses the kind of corporate cultural practices that ensure business do not harm already, but it's kind of a minimum. And they ensure that, the goal is that they have positive impact, not only do not harm, but they have positive impact on economic, environmental, and social outcomes. So we have here again standards that are the OECD guidelines for multinational enterprise, and that are the international gold standard for responsible business conduct. But what is more important is that these guidelines, they call for due diligence. They call business to do due diligence and to identify, to assess, to mitigate adverse impact in operations, not only in their own operations, but along the whole supply chain. That is quite important and quite difficult to do, and also with business relationships. So we have developed specific guidance on due diligence for different sectors. We have begun with some sectors that were high risk, extractive industry, for example, agriculture, textile, after the Rana Plaza events in Bangladesh. More recently on institutional investors, so that's of interest for this prize. And last year, in June, we had general due diligence guidance. So these two OECD instruments on corporate governance and responsible business conduct are addressed primarily to governments on how to put the relevant framework that would allow business to behave better, etc., etc. But of course, they are also addressed in fine to business. And these due diligence guidance are addressed to business and have been negotiated with business intensively. Conclusion. We'd like to reflect on why trust in finance remains that low, even if we know and we are convinced, and I guess around this table everybody is convinced that it's quite important. And also we have the policy tools, in fact, to tackle it. 3 years ago, we have published a report at the OECD, Integrity in Business, which took stock of practices relating to business integrity in corporate governance frameworks, strategies, and operations. And what we found, big surprise, there is an implementation gap. So it's always the problem. I was discussing with the Banque de France before this, and now I think in most cases we do have the good rules, we have reasonably good regulations, we have reasonably good supervision, etc. But there's still an implementation gap. So that's where it's getting complicated and difficult. We all know that to bridge this gap is difficult, and you need a lot of time and effort and consistency and coherence also. But while some businesses see the benefit of good culture, good conduct, others do not. And there is recently a survey by Hermes Investment Management in their annual Responsible Capitalism survey that shows that only 48% of investment managers believe, only half of them basically believe, that companies that aim for good environmental, social governance outcome produce better long-term benefits. So it's quite also sobering. Only half of them, and they are supposed to be the guys with a long-term view, you know. So we still have a lot to do in terms of just awareness. We have some way to go. So that's why I think this prize that is targeting the young people is good, because this young generation, mostly they have spent most of their working life in the aftermath of the crisis, so they might be a little bit more sensitive to these issues of misconduct and what led to the crisis. And also they are the future leaders, so we hope that this prize will influence this new generation, you know, of future leaders. So I congratulate you for organizing it, and we are very happy to support it. Thank you.
Thank you very much, Mathilde. I now give the floor to Paul Dębinski to moderate the panel, and we look forward to the debate there. Thank you.
Wonderful speeches. Thank you for which I thank you very much. I wonder what is left to be said by the roundtable, but I'm sure that with the resources we have in this roundtable, we will find things to be said, that to be mentioned, etc., etc. I think that 10 years after, there is a lot of events that look at what happened 10 years ago, what are the reasons, etc., etc. But I think the really interesting question is to understand why the few observers that were warning, that have spotted some of the elements of dysfunction, and you mentioned Robin and many others, have not been heard somewhere, or their warnings have not been taken seriously. And I think this has to do with herd thinking, which of course is the first step or zero step leading to herd behavior. So are we in a better shape today? Or are we back to kind of herd thinking? Are we willing and able to listen to weak signals? Are we able to capture them? And maybe the pieces of analysis, pieces of anecdotes, because not everything is in statistics, that are a little bit off the road, are we able to pay the necessary attention? Of course, there is a risk of dispersion that goes with this. So this morning, thank you to you, Mathilde. I had a meeting, very interesting meeting with the Secretary General of this House, the OECD, where there was the opportunity to listen to the efforts. And you mentioned many of them that the OECD has undertaken since 10 years with the keywords integrity, trust, governance, good business practice, and so on and so on. So things, at least on the agenda, and we are going to speak about the agenda, have been moving and have been shifting. And I think that what was very nice, what came out of this conversation with the Secretary General was something in the sense, well, with the young people that you are bringing somewhat, the prize is bringing to the fore through the process of selection, jury, and so on, maybe there are some weak signals that can raise attention and get to the people that should listen to them in a maybe less institutional way that it usually might happen. So that's an invitation also to get in, to contribute to cooperation. And thank you very much for having us here and for your support now and maybe hopefully in the future. Yeah. So it's very, very important. So we have this question in the title of the roundtable, which is 10 years after, what is on the agenda? And I think, as I mentioned, the agenda of OECD has been shifting. So it is important to see different partners, different members of this roundtable, what are their view on the two aspects. One is what is on the agenda, and the second, on which you both insisted before, what are the possibilities of making these points of the agenda a reality? So not only addressing them in a kind of intellectual way or maybe conceptual way, but also to make them move and to make them change the industry to finance better serving humanity or, humanity or the economy, real economy and humanity. So I suggest that we have two parts in this roundtable, which, well, we have 1 hour to go in this roundtable. One would be what is on the top of agenda in terms of ethics in finance. We will first invite the first round of the panelists and then open to questions and remarks of the participants to the meeting. And then we move to the application part or practical part of the conversation, also with short statements of each of the panelists. I would just quote for the beginning, maybe, I would just quote something that Stéphane Bernard from Euroclear crafted when we met in Krakow a few months ago. He was saying, well, but ethics is a non-discriminating competitive advantage of the industry, or should become non-competitive, non-discriminating competitive advantage of the industry as such. I think it's something, it's a concept, of course, but it provides some lights how to move along it at the industry level and not at institution by institution level. So this being said, I think we can move to the different panelists, and you see the composition of the panel. You introduced most of the members of the panel, Josina, so I will turn to my right to Mr. Guillaume Ellier, sorry. I was wondering if one has to get the T or not. You are head of regulatory compliance and public affairs at Euroclear. You joined the institution recently. You have we met 20 years ago. You reminded me that we met 20 years ago in other contexts, but also with ethics in finance. That has to do with ethics in finance. And before, in between, you have been more in the public sphere of finance. So what is, according to your view, still on the agenda?
Well, thank you. Before answering your question, I would like to reaffirm the support of Euroclear, even if I am a baby Euroclear. I have the feeling that we are long-standing supporters and partners of your prize, and very honored to be associated to this initiative. Taking your question from the perspective of a CSD, you know, CSDs are really strange animals in the landscape, and the positioning of CSDs in the value chain, the relationship that we have with central banks, the fact that we have not been hit by the crisis as an institution, makes probably the situation a little bit different from the situation that that is ongoing with intermediaries or banks. What is interesting with CSD is to see that they are often considered as public utilities or servicing the public interest, and I understand that in some countries CSDs are still public entities, and so from this point of view, I think there is kind of common understanding or common targets or goals between CSDs and regulators to protect the market and to make sure that the market is functioning smoothly. It's the reason why we have not been hit by the crisis, basically. The CSDs, the purpose of a CSD is not to take any financial risk, but to protect the market against the risk. So we are in I would say, a strange or a specific situation. Now we look at what is on the agenda. We are also in financial institutions as others. We have our regulator. We have our regulation now with the CSDR regulation, and we can draw all the lines for the futures. What I see on the agenda is maybe two elements that I would like to highlight, but just to open the discussions on these two elements. The first one is, and we have mentioned this earlier, the place, the room for individual behavior. It's also because I've been probably during 12 years a regulator that I can acknowledge that great efforts have been done by regulators in all areas, not only in CSDs, of course, the banks, intermediaries, asset management, rating agencies, as you mentioned, benchmarks. All these issues have been covered by regulations, but still, is there any room for ethics, for individual judgment in the implementation of these rules? And my concern is when I see these layers and layers of regulations, from the standard setting bodies to the European institutions to the national regulators. Man can say, well, in fact, all the individual behaviors are driven by specific rules. And as now a compliance officer, I also realize that, sometimes you have just to tick the box and make some survey about the way the people are complying with the regulations. But is there any room for personal judgment in front of a specific situation? That, I think, really the element that strikes me a lot. And with all these regulations, the risk is that people in banks, in financial institutions, consider that everything is with the regulations, and there is no room for any interpretation or personal conduct. That would be my first, I would say, more philosophical, maybe element. The second one, more pragmatic, is data. All the questioning on data. And here we see that we have many regulations, maybe a little bit contradictory regulations. So when we deal with due diligences for money laundering purposes, for instance, and when we deal with data privacy law on the other side, we see that, well, there's not a perfect match, I would say. And this issue of data, because data is also a commercial good now, and is used by us and by our institutions also to make money. We need, I think, to really reflect on what kind of behavior we would like to develop around data. So if I may just draw these two key directions, more philosophical for the first one and more pragmatic for the second one.
Thank you very much, and I turn now to
Oh, sorry, beg your pardon. Yes, thank you, Professor, and thank you for your excellent keynote addresses, Matilda and Jacina. I believe that one of the great topics on the agenda at the moment is to do with our transition to a cashless society. So across the UK, at least, this entry into this bright new future regarding a cashless society is heralded as, as an unqualified good. Yet, bubbling underneath the surface regarding this cashless society are several, I guess, practical and ethical questions. So one of the questions that is confronting us at the moment is whether we can regard the cashless society as really inclusive. So if you actually look at the data as to who adopts cashless means of payments, it tends to be younger people. But at the same time, it tends when this method of payment is adopted, it tends to exclude those who are older. So we have to ask ourselves whether we're actually, eliminating, a rather large part of society as we enter into this cashless society. Another very, very fundamental question is also the issue of cybersecurity. So cybersecurity is actually one of the major issues that is at the forefront of the concerns of banks. And as we transition to a cashless society, we have to really ask ourselves, are we exposing ourselves to, hackers and those who are in the digital world who have rather unscrupulous intentions? So one of the fundamental things about programming, as someone's actually starting a technological startup, is that anything that can be programmed can be hacked. And if we do transition to a cashless society, are we perhaps making ourselves vulnerable to maybe something paralleling the Great Depression just because of the intentions of hackers? And also fundamentally, we also have to ask ourselves, if we are transitioning to a cashless society, is this actually something that people genuinely want, or is this something that banks have just insisted just because they just have this vision and they just want to impose it on consumers and make us believe that we want it? So those are the topics that I believe that the issue of our transition to a cashless society is something that I believe is at the forefront of the agenda. It's already a major issue in the UK. In Sweden, in Estonia, and the Netherlands, cash is pretty much non-existent. In fact, there's already a cashless society as it is now. So I actually do believe that it's a very, very topical issue. And I actually wanted to, on that note, I also wanted to allude to an issue raised by Matilda, and that was the issue of this belief among many people that doing good and prospering materially are diametrically opposed. So if you do good, then it must hit your pocket, and conversely, if you want to earn money, you have to do bad. I actually don't believe that's the case. I believe that it's possible to do good and also to, do well at the same time. I do believe that trust is a very, very fundamental part of any business transaction. You wouldn't engage in a business transaction with someone that you didn't trust. And I actually do believe that there's actually quite rich history behind this assumption that the two are diametrically opposed, harking back to Milton Friedman and others. But recent research has actually consistently shown that actually ethical behavior does actually, it does actually profit companies. And I actually do believe that we really need to challenge this assumption that the only way to do well is to behave in rather unscrupulous means. So that would be my overview of the current state of affairs.
Thank you. Thank you very much. What you said about this dichotomy, it's frightening. If you're referring to it as being present in the minds of your generation, it's frightening. Good cannot pay for itself, so it has to be sponsored, and bad is the behavior that pays in terms of monetary rewards. I mean, if it's the worldview in which we carry our society, it's for the next generation. It's frightening.
In fact, it's actually quite worrying that actually a very common thought. If you look at the empirical research, that's actually not shown. In fact, I actually come from an economics background, and a similar result was also found as well. So economists used to believe that the only way for economies to grow was for inequality to be perverse. But in fact, it's actually been shown from the most recent research that equity is in fact a function of economic growth, and economies can only prosper insofar as like people actually do have access to material goods.
Fortunately, it is not the only evidence we have. There are pieces of evidence.
What has been made since the crisis, you know it, regulation, of course, you said it. But also, this morning there was the inauguration of the new premises of the ACPR, the French supervisor for banks. Mario Draghi was there, the governor of Banque de France was there, several governors from different central banks were there. And there was a feeling of the urgency, of course, and the way the SSM, the single supervisory mechanism, was implemented also was praised, because it was made in a very short time. It's now operational. The banks are supposed, and according to some ratios, are more solid and sounder than they were just after the crisis. And that's very important. Recently, Daniel Nui, the head of the SSM body, said there will be a crisis, but crises are part of the capitalism. We know it, but we are better equipped to fight the next crisis. But then, of course, there were also some of the speakers this morning acknowledging that there was this implementation gap in terms of ethical behavior, for example. But even being ethical in implementing the rules, I'm not speaking of people having the intention not to be ethical, but just trying to implement the rules. It's very difficult. First of all, it's difficult because there are many rules, sometimes competing each other, and so there was in the conclusion of the governor of Banque de France speech, the idea that we have to simplify now. So there was a need, because it has been said that part of the crisis was the consequences of unethical behaviors, not only but partly unethical behaviors, and so it gives an explanation of the numerous rules that was then implemented. But too many rules in the end makes confusion and risks. So now even our governor is saying, okay, we have going to simplify, but then we work in a system and a system of central banks and national competent authorities, of course, embedded in national cultures. And so even if you are ethical, your way to implement the same rules, and there is a single rule book, not only regulation, but the way you have to implement the rules, single rule book. But even with the same regulation and the single rule book, all of a sudden you realize they don't apply the rules the same way. So this is the individual aspects you mentioned. And so now they have this idea of second part of the conclusion of the governor was to develop exchanges of supervisors, because at the moment we have a system where you have the national competent authorities under the umbrella of the ECB. But that creates kind of differentiation between the center and the local authorities. So the idea is to have exchanges, synergies, not only to be more efficient, but to cross-cultural experiment the differences between the different cultures. And this is very difficult. And it takes time, consistency, of course. But I think it's key. I think sometimes the specialists in finance, they forget that maybe some of the best solutions are not going to come from finance, but they can come. You said psychological. I know it was your example of how do they behave, how do they think. So psychological behavior is also important. Sociology is very important. Philosophy is very important. Prevention is not in the hand of the financial system only. We have in France a maxim saying that the war is something too important to be left in the hands of the military. But the same for the finance. You have to integrate a lot of point of view coming from other sectors, and that makes it more difficult, of course. But we cannot rely on those having the job in their hands. So that's the first reaction I have.
Thank you very much. I think it's very important. We have been mentioning that the prize intends to expand into linguistic areas in order to allow young people to express their thoughts in their mother tongue, or the language in which they master very well, including the emotional part, before then being professionally translated and reaching higher stages of the competition. So what you say now, referring to this morning meeting, is that this interculturality somewhere has been identified by central bankers as being an issue. So it's extremely important, and of course it's music to our ears. So thank you very much. Pierre Delozin, you are Délégué Général de l'Association Française des Marchés Financiers, which is another perspective. It's not a central banker, it's not the winner of the prize, it's not the head of regulatory or compliance. It's a perspective of the market.
Thank you very much, Paul. Well, I'm not Délégué Général now today because I've left last weeks. But it's obviously a point of view of somebody from the private sector, and especially from financial markets. What I can say is that, of course, after the crisis, there have been huge changes. But the main changes have been on the regulatory side, and mainly to make the system stronger and more resilient. So it's based on building walls, higher walls, thicker walls, and having banks in a capacity to resist to crises, significant crises. It is the same for the markets, with for example, the development of clearing, which is, of course, a very good idea again, but it's concentrated on avoiding risks or trying to manage them better. It's not very ethical. I mean, there is no significant message on ethics in those regulations. I mean, they were not wrong, and it was obviously the priority, and understand very well, and so on. But it's clear that it was not the message. And obviously, ethics is something that cannot be developed easily in the private sector, let's say from scratch, like people converting to a religion or something. So it has some link with, let's say, society in general and regulation in particular. So if regulation has also the duty to send some messages in that direction, which is not the case, really. So with some exceptions, and perhaps we'll discuss that in the second round, and then especially I would mention remuneration and socially responsible investment. But on business itself, and especially on the way people act on the markets, on the trading and stuff, whether people or IA, but it's the same thing, because IA, obviously, somebody who's devised the IA. So there is no very significant change as regards ethics. And it is worrying because I agree with what has been said, that in the longer run, it's probably wiser and more profitable to be ethical. But I would say that it's not so true in the short run, first, and measurement is very often in the short run, especially measurement by the stock exchange. And second, I think finance is a bit different, because finance is one area where it's probably much easier for people and then for institutions to make plenty of money, taking risks for a relatively long period of time, without bearing the consequences of their choices. So if you would take, let's say, a ghost curve, if you are reasonably lucky to be in the middle of the curve, you can make plenty of money for some time. And then, of course, it may happen that circumstances change, you don't make any more money, but the money you've earned is in your pocket, which is one of the cases. And I agreed perfectly what you said, Madam, and in the beginning, that is, previously, most of the firms were partnership. I don't know in the UK, but in the US, it meant that the partners were responsible on their whole wealth. So, for example, if you take the case of the last crisis, the people in charge of Bear Stearns, or even more of Lehman Brothers, of course, were in a very shameful position. But the huge amounts of money that they earned in the previous 10 years was and is still in their pocket. There were some fines, but mainly for the firms, not for the persons. So it's a case where you have a possibility of making a fortune, but with a relatively low probability of giving back that fortune if it happens that, let's say, what you did was not only wrong for your shareholders or whatever, but for society in general. So this is something very specific to finance, and I got the impression that people perceive that in an intuitive way, in some way or other, but it's clear that we have not given a clear answer on that. And so it's one area where reflection is important. For example, if people, well, I'd say CEOs of banks or heads of financial market departments, and so on and so on, would know that they would lose everything if the bank go bust. I think they would see things in a somewhat different way. And second, it would send a message that responsibility is very important for society. It's very important, which means that we've put that in law or regulation or anything. So I think that's one of the major areas where the consequences have not been, let's say, taken up to the end. Priority was, of course, safety, was systemic risk, was so on and so on, and it was perfectly right. But then you will have people who will behave well or less well. And I would think that they still have a reasonable incentive to behave wrongly, at least in the meaning that they take risks they should not take. But those risks are higher for, let's say, external people, for society, for all the shareholders, or whoever, than for themselves, which is, of course, increased by the fact that measuring the result is quite difficult in plenty of those activities. That is, you do not see the real impact before years. Market to market is a partial solution, but only partial, because of course it gives the message corresponding to what the market has integrated in the price, but not, of course, what the market has failed to integrate, which is the real question. Thank you.
Thank you very much. Short, long-term perspective of Banatunde, who was mentioning it a few minutes ago. I turn now to Jose Luis Fernandez, who just arrived from Madrid with academic perspective. He is teaching ethics for many years. So, from your perspective, what is on the agenda?
Thank you. In the agenda are very key, important topics for academia. I'll formulate in a nutshell this way. In the agenda, is the need to generalize the concern for the epistemological, theoretical finance, as well as for the moral dimension of financial activity. This might sound a bit cryptic, but this morning when I was trying to write some notes in order to stick to the time of 5 minutes that Paul Dembinski asked us to follow, I realized the connection, the deep connection between the epistemology and the ethics. The consequences of our thinking maps can be good, bad, worse. And I think that in the academic discipline of the finance are a lot of assumptions that need to be critically analyzed. Because I don't think that finance, as is being told around the world in many business schools, is not able to face the challenge that we as humanity are facing in the coming future. Finance activity has at least 5,000 years because we have the history of the Red Temple in Uruk in the Mesopotamia. But finance as an academic discipline has not more than 120 years. 120 years. A landmark was in 1920, the book of Arthur Stone Dewing, published in Harvard, a very influential work, The Financial Policy of Corporations. As it's known, in the 50s of the last century, in 1958 with Miller and Modigliani, was already settled what has been known since then under the concept of financial objective. That is, maximizing the value of the company in the market. The model, the clean model, an effective paradigm is based on two pillars, epistemological pillars, and a consequence as a corollary. The first pillar is the efficiency of the markets and the valuation models, accuracy of the valuation models, and as a consequence, as a corollary, the optimal allocation of resources. And this paradigm based on capital asset pricing model and in arbitrage pricing theory dominates all around the world. Some of the manuals that are studied still in business schools are the same that I studied almost 30 years ago when I was studying my MBA. For instance, Brilliant Mayer's Principles of Corporate Finance is the same, but they have added a short chapter on ethics, but this is not enough. What is necessary is to realize that those clean models are very far from the dirty hands that you have when you enter into the reality, and reality is tough. So we have a lot of things to do. For instance, we have to critically reflect on the excessive confidence that the model of theoretical finance works correctly, and that agents seeking for maximization of value in a context of efficient markets will achieve an optimal allocation of resources. Second, the excessive confidence in the virtues of self-regulation and transparency of the market. We have to fight against the lethal vision of the long term. The failures in risk control and supervision had already been commented here. And I think we have to put into question marks the overvaluation of the Anglo-Saxon financial model based on individualism, short-termism, and shareholder view of the finance. I suppose that for the academia, for the academic world, it will be good to introduce financial ethics courses in the curriculum, and above all, to insist on the importance of paying attention on the ethical dimension of finance during the classes of technical subjects of finance. Not only add a new course, but thinking when teaching risk management, derivatives, and so, thinking of the ethical consequences of those products and those practices. Because finance activity is part of human action and free and conscious, and therefore offers an ethical dimension to think about. So finance is neither immoral in themselves, far from it, amoral in principle. In any case, it should play an exclusive role in the pursuit of the common good. We need, thinking in the long term, as Josina said at the beginning of the conference, we need to think in the long term. We need to have a stakeholder approach. We need good corporate governance. We need triple bottom line. And we need to opt for the sustainability development goals. A first step for a business school could be to subscribe the 6 principles for responsible management education and try to implement them in the curriculum and in their research projects. Thank you very much.
Of teachers and theoreticians. I stress what you said because I agree fundamentally. It's not enough to add a chapter to a book. The book has to be revised. I mean, that's the challenge. So I open the floor now for a few remarks, questions, etc. to this first part. What is on the agenda before moving to the
I want to react to what Pierre said and also to what José Luis said. I think also we are facing a very difficult task for regulators and supervisors in that they have to regulate past and current models, but we actually need to think about the future. The future is there now. And in that sense, the kind of people and organizations that are entering, as we call finance, they are hackers, gamers, people I have never even heard about, so organizations that I've never heard about. So, you know, we're sitting here assuming that, you know, we're still sort of, but I mean, can I talk to a gamer? Can I talk to a hacker? I don't know.
There we go. So in terms of 10 years on from the financial crisis and what's on the agenda, very seldom do I hear anyone in the financial industry talk about ethics. They talk about trust, but a lack of trust. But very seldom is it about ethics. To build on what Babatunde was saying, not so much even the past 10 years, but even just the past 5 years, I think the 3 things that I see the industry really focusing on are cyber, which is reactionary, compliance, which is reactionary, and fintech, which I think initially a few years ago was reactionary, now is being seen as more of an opportunity. And I think with all of this, it's a bit of an evolution. There is an evolution that's going on in the financial industry. Again, to what Babatunde was saying, talking about cashless society. So I think the industry is trying to evolve itself. But again, it's not looking at it from an ethical perspective. It's not talking about ethics. It's looking at even from a long-term perspective. It's trying to look at how to minimize cost and so on. So somehow we do need to try and get ethics into the agenda.
Yes, just to react to the different propositions for the agenda, I think that this one on fintech, this new technology is quite important because that's an area where we are all lost a bit. We're just discovering what are the implications in terms of regulation, in terms of conduct, in terms of supervision, etc. And if you think about AI, about blockchain developments, they can be very disruptive. They are not yet disruptive, but if you have big actors, big tech entering in this sphere, I mean, it could be a quite different financial sector that we know of today. So I think reflecting on the ethical aspect of this change seems to me very important, also to guide the policymakers what they should do with it. You know, so.
Thank you. Yes?
I'm Laurent Mortreuil and I've been a banker for 25 years. Excuse me. I'm pretty sure that Mrs. Kamerling, when you were at ING, and Pierre, on your whole life, most of your colleagues were highly ethical persons. Most of the bankers I know are highly ethical persons and are driven by ethics. It may not be a proper ethics, but we speak about ethics all the time. Most of the bankers I know, the ones who grant loans to customers, try their best to grant good loans to good people. And this is kind of ethical, and this is the, vast majority of the banking industry. Now we're talking about capital markets, and even there, they have strong code of conduct. You know, Kerviel, who has ruined the reputation of a strong bank and lost a few billions, was supposed to abide to a series of ethical behavior rules which were in place, and you had hundreds of people who were paid to make them work. Hence, the problem is probably more serious than trying to make finance ethical, because most of the financiers I know tend to see themselves as very ethical persons. The issue, Professor, is certainly more rooted in the whole economy. They are not the good guys of real economy and the bad guys of finance. As soon as we try to look at economy as the optimization of utility function, we are in an ethical world which kind of be non-socially ethical. And in my personal life of banker, I had to face much more unethical behavior by non-finance people. Now I have a last question. I have been not offered, but I walked to an opportunity as a job of CFO for a large institution, a large banking institution in London. And the total package of this position was £7 million. with such, environment, anyone who takes this position has one ethical conduct, which is how to keep it.
Thank you for the comment, and I think I will add another point from this economist intelligence unit study that we did together with CFA. Most 60% of those questioned, and it was a large proportion in the city, said, of course, we recognize an ethical code and we subscribe to it. The problem doesn't lie there. The problem lies that they get faced with choices in their career when they know they probably have to go around this ethical code, because you have to make a certain budget, because you have to, and I've seen that in my career. I've seen the network moving into sales of derivatives. Why? Because we were in a low interest rate environment, because how to make your money on loans, how to make your money. So then you go into something which seems sexy, which is derivatives, and you start selling it. And as sales targets, as we all know in the network, get in terms of targets of amounts, it becomes extremely interesting. And then you start getting a sort of herding behavior by the whole bank, going from up to down, saying, well, this is great, we're actually making money, we're looking good. And you end up with a banking group being for 80% or whatever, majority, based on the profits of the financial markets division, which, that starts, and I think that's where it starts from. And that's why I went into that point on having different people challenging. I was so often the one in the corner of Myers-Briggs, whenever we were doing things totally different from the others. But, you need people to challenge.
Thank you. Christophe Nijdam. I'm a former banker too. Just wanted to say that in terms of ethics in the industry, there has been a big change because of compensation, as you did mention it. I remember when I was a young banker at a French bank that's now called HSBC France, Crédit Commercial de France, and I was involved in co-starting the derivative activities there back in 1983. So it's not recent either. At that time, there was no question that CCF was not going to offer derivatives to customers that did not understand them, namely, at the time, the ancestor of Dexia, that used to be called CAECL, and then Crédit Local de France. Now, the same Dexia, as you know, because you were talking about bankers offering loans with lots of ethics, because of bonuses, provided loans that have been called toxic loans to hospitals and all that, with embedded derivatives. So some bankers, even in the traditional banking corporate loan market, have lost their mind. A few quick remarks regarding compliance. Compliance has become a box-ticking exercise. Generally speaking, and God knows that I'm involved in regulations, most of the regulations that we have seen since the crisis are rule-based regulation, as opposed to what they should be, which is principle-based regulation. And talking about ethics, if I had to make a comparison between regulations and ethics, actually ethics in general is and should be above the law, above the rules. So that's why we do need, I don't have the keys to that, but we do need more ethics in general, because when you have ethics that are above the law, actually you can simplify regulations because people would not enter into big, let's say, misconduct. Last but not least, if you want to change behavior, you also have to, let's say, discipline people and give sanctions. One of my favorite, and I might shock some of you, example in that respect is what I call the mafia's law. And the mafia's law is punish one, you teach 100 at the same time. Thank you.
I would like to piggyback on what has just been said. For the punishment of my sins, I was for several years a trustee of the International Accounting Standards. I didn't know very much about accounting, but I had to learn. And I learned, of course, the big difference between the American approach, rule-based, and the European approach, principle-based. And I agree that it's a basic problem when we talk about ethics. And I'm a little bit afraid hearing about the rule book of the Banque de France, because I don't think you can do ethics by rule book. You have to have ethical principles, it's going to be impossible to cover all situations in advance. How do you see that in the field of ethics in finance? I mean, is there any attempt to reconcile this problem of rule and principle?
Thank you.
First of all, it's a rule book of the SSM, not of Banque de France. So maybe it's worse, but because it's supposed to work for all the countries involved in the Euro system and the SSM. But it was the conclusion of the governor this morning. We have a huge work to do, but it's not on working again on the writing new texts, you know. And when he said we have to simplify, we are not in a position to modify the regulation. The regulation exists. Now the regulator, and more than the regulator, the supervisors, have to simplify the way they implement the regulation, first of all. This is only on the regulation part. But also you have to work together. I mean, people, real people, exchanging jobs, going to work in Roma for French and in other countries. And this is the human part of the job. We have the regulation, we have the supervisor, a European supervisor, we have the rule book, but now we have a lot of work to do together and to understand the way we work, also to understand the way we react. Take conflict of interest. Conflict of interest, there may be a definition we share, but the way we understand it is very, very different from one country to another. First of all, even in terms of regulation, you'll have countries expecting a lot of details. I want to know who are the persons who could be the cause of a conflict of interest. We make the list. This is, for example, the German way. The German way would be, we have to be accurate. Because if we are not, there will be a loophole, and the bad ones, they will use the loopholes. You may not agree, but this is the way they think. Then you have on the opposite side, I would say, my governor is more on the opposite side. You define very well the principles. You say what is a conflict of interest, and then it's up to the individuals to understand that your close friend, for example, is more important in that sense than your brother or your parents or your daughter, because you understand to whom you have to apply this. And then in between, you have the ECB trying to have all these people, you know, working together, and also the fact that in certain countries, even the concept of conflict of interest doesn't exist in the minds. And so they try to explain, sending people to explain how it works, that a conflict of interest is not necessarily bad behavior, but a situation in which you could have bad behavior, etc., etc. So yes, the human factor is essential. I think even the regulator and the supervisor and my governor is really aware that this is the work we have to do in terms of what is on the agenda. I think it's not labeled this way, the human factor or the cultural factor, but the cultural factor is really essential. Cultural because we have differences, and we are on the same system. You know, financially speaking, it's a unified system. And then even if you work on the cultural system, you have also the human factor. You could also have people, you know, I don't know if you know this, but the deputy governor in the Bank of England has to resign 15 days after having been appointed. Why? Because she made an honest error, according to her own words. And that is the word had his works, actually. It's very important. As you said, the vast majority of the bankers and the professionals in general, they behave well, or they think they behave well. They are not trying to cheat, but they may make honest errors, and the consequences could be harsh for them or for the company, and that's very important to understand that. We have to have people being aware of what they are doing, even if they are thoroughly honest, with no bad intentions, because they don't understand the situation, they don't understand the concept, or because they overestimate the ability to manage the situation. For example, in terms of conflict of interest, the usual answer, even today, I have from managers discovering there is a conflict of interest of a subordinate, is to say, okay, it's a very knowledgeable subordinate, very earnest. I trust him. He will manage. Of course, it's a bad answer. But yes, you have to tell people that it doesn't function this way. And that's the very difficult question we have ahead now. And so it needs, as I said, other perspectives. It needs time, and also it needs something very important. It's direct contact. You know, even in my institution, okay, you don't have these financial incentives to have bad behavior, but you have other incentives to behave. But we have a very vertical culture, and we respect the regulation. We are paid to apply and to supervise, so we like regulations, you know. But if you send text, even signed by the governor, explaining how to behave, and then you go to the people, I mean the DGs, the directors and the heads of units, and to say, okay, how do you understand this, etc., they didn't pay attention, actually. They actually are interested in when you meet people. You meet people, you explain, you have examples coming from another department, of course, and then all of a sudden they say, yes, conflict of interest is very important. Now I'm totally with you, etc. But you need time and efforts, and I'm not sure that we invest enough in this field. I mean,
thank you very much. Just a layer of complexity. The continuity of what Pascal
Yes, right. Maybe. Well, I was just thinking about what kind of proposal we can put forward for the 10 next years, and the first one is certainly reactivate the debate on ethics and finance. That is what you are doing, what we are currently doing together, but focusing on individual behavior. You know, reading all these newspapers about the next financial crisis, I was asking myself, can ethics avoid the next crisis? Well, That's an issue which is not in the newspaper. You will see geopolitical issues, cycle, interest rate rise, etc., as the root of the crisis, but nothing on ethics. Can ethics avoid the next crisis? And reflecting on this, I was thinking, where is the debate in our society today on ethics? I only find a real debate in the climate change area. Here there is a strong debate on ethics, on long-term versus short-term, on individual behavior in our day-to-day life. But in finance, there is no more real debate on individual behavior. So I would, as a proposal, reactivate this kind of debate. The second proposal would be education. I think that in company like Euroclear, but probably in many companies, we have to educate people on the, not only on the how, but also on the why. Why do we have such regulation? What is the purpose? What is the rationale behind such or such rules? Because we have plenty, we have the rule book, but how can we understand all the rules or keep in mind all these rules? But we have to understand what is the purpose behind all this. And I would call for a kind of partnership between regulators and regulated entities, so that regulators could also help us to understand, well, that is the reason why we have put in place this type of rules and trying to educate a little bit more people. And maybe the third proposal is building on the discussion that we had on rules-based or principle-based. I would put forward this proposal to have not only a regulation by principle, but also supervision by principle, which is a little bit different, because if I remember my years at the IMF, in the investigation process, in the supervision activities of this authority, it was a necessity to back each behavior on a detailed rule in the rule book to make sure that we would be able to evidence it before the courts, and in a certain way we avoid leaving sufficient room for interpretation, giving directions to the supervisors. So I would also plead for a kind of supervision by principle.
Thank you.
Yes. No, very shortly. I used to be also a banker, and I just should like to come back on the title, 10 years after, what's on the agenda? All the interventions I have heard for 1 hour, I think one word is missing, education. I mean, for the people who will be bankers tomorrow, is it not a very strong necessity to give the idea that the behavior of the banker cannot be in the future what it used to be 10 years ago? Because many people speak about the Lehman crisis, the Lehman collapse, and try to derive the lessons of what happened. But if we consider that it's only a misfortune of capitalism, something of an accident, I think we shall not take the lessons of history. And I'm sure that I have been a banker for 40 years now, and what is striking for me that people do not consider that the question of how, what you mentioned the term behavior, how must a banker choose his behavior by respecting regulation, ethics, but it's a matter of individuals. And it's narrowly linked with education questions. And this is the only thing I wanted to underline.
To add, I mean, I all agree with this focus on human factor, individuals, etc., and education. But I think we should not forget the systemic aspect, and especially what was mentioned by Professor Fernandez. I mean, the way we think about our financial system, the way in economy we think about the system. As you say, if we still believe that it's an accident, I mean, we need to change deeply the way we frame our thinking about economics and about finance in particular, to change the way we behave. So we need to go deep in this reflection also.
Of the round table, because otherwise we will end up at midnight.
Yeah, yes, oh yes, of course.
Yes.
No, it's a reaction of the question of ethical people in finance. I agree that, of course, most people I've seen in my business life were ethical people in the meaning that they thought they were doing no significant wrong and doing well and so on. But just something I remember when I was in charge in the Banking Federation. You know, when people overdraw, have no money, but they pay and so on, there is a fee. The level of fees on all banks were and still are extremely high. It is hundreds of euros every month at a time. Now it's lower, but it's still relatively high. I try to explain to the people in the committees, well, it's extremely high. The clients think it's robbery. I would say that I also think there is some kind that looks like robbery. Those people were perfectly honest. But they said, what my duty is my P&L and what is asked by my company. So there is the question of the level of ethics. So at some stage, you have to change the level of ethics and make judgments about the fact that, well, if somebody has no money to pay the bills, asking 200 or 300 euros every month additionally is probably not completely honest. So it's another level. And I agree with you, Chairman, the fact that it is something that has to be based on principle, but also, of course, on education. You cannot put that in a rule. So you have to educate people to do that, and it has to be socially accepted that people make references to this kind of elements. In that case, the only ways I had to have change move is to say, look, there would be a law. And then, of course, when they see the possibility that the gendarme is coming, it's a bit different. But if not, they don't move from, let's say, the low level of ethics where people are, let's say, settled.
Very important point, that higher you are somewhere in the hierarchy, not necessarily the same perspective of ethics applies. On the agenda.
Yes, on the agenda.
What should be done, because you are also very much concerned about proactivity.
I generally feel that education is a central thing that needs to be fixed, particularly among lecturers and academics. I think they have to accept the responsibility that what they teach to young people has a very, very tangible impact on the future. So, for example, the common belief that shareholders are the only thing that matters in businesses, well, it's not a new belief, and this is a belief that dates back to Milton Friedman's influential paper in the 1970s about businesses there's no such thing as corporate social responsibility. So I do believe that education is very, very fundamental. Academics really need to understand that what they do teach to their students has a very, very tangible impact on society. Not only did we see that in the last 10 years, but also the 10 years going forward. So actually, when the honourable academic mentioned stuff like such as CAPAM, it brought memories back to me, because when I was an economics student, that was the constant thing that was being taught to me. And it was actually very interesting that when you're taught this as a student, they say, okay, that this is the CAPAM model, but then you see a whole list of assumptions, and you see that this is not really comparable to reality whatsoever. But if you were to act on these assumptions, well, it could actually lead to very, very systemic problems.
Thank you. Academia. Sorry.
Before we give the floor to academia, I think maybe hopefully José Luis, you can come in on that. I think we've been talking about education sort of at the university level, and I think that's key. But you have to go before that, because the ethics that's part of the DNA is already built, even some say at primary schooling. And this is important. As society becomes more consumer sort of ethics, you know, is not so much in the DNA of us now. We're looking in a different world, and I think to build that conscience back, you have to start very early on. So that's one comment. The second one is that I thought Ross Murdoch's essay was very good on this, on the how to build the education. There's when young people come in to the system, that it's not enough to give them an ethics code, and they may have a sense of I'm ethical, I'm here to do good, but you have to work with them and show them how this works. And I think a good way of showing is also by people giving testimony how it went wrong for them, why they took a wrong decision.
Thank you.
And Justina Kamerling's point. So yes, I do actually strongly agree with Justina Kamerling's point. So I do believe that actually one of the major problems in society today is this belief of instant gratification, and there's there's a deviation from the fact that, you know, we should really aim for the long term. And I think this is a much broader problem than just finance. So social media, for example, it's been shown in psychological studies that this actually induces people just to think for the short term, that in fact actually has a material impact on the brain. I think it influences the dopamine. So this is something that actually multiple parts of society have to really be involved in, you know, that we shouldn't just aim for the short term, we shouldn't just aim for instant gratification. Of course, we see that in the financial sector with just this constant look at quarterly results and not what will happen in the next decade or so.
Thank you.
Okay, I think in this part of the roundtable has aflored a lot of questions, important questions. Just one question of a preposition, in or of. There has been a long debate about if it's necessary or it's sufficient to have business in the organizations. So good people in good organizations is the ideal. But is enough to have good people in organizations, or is necessary to think about ethics of organizations? This is a debate. So there are three levels. At the micro level, I am a very, very ethical person because my father, my mother told me, do this, don't do whatever you don't, they do for you. But it's the macro system, the capitalism, or is need to be fixed. Is in the meso level, is where the institutions, the organizations can do its contribution more important. And in this case, in ideal situation, of course, bankers are people with the virtue of the prudence. But if you put enough perverse incentives, bad corporate governance practices, you can get what you don't like. So we need rules and norms, but also we need principles and values, because rules and norms without principles and values are blind, and principles and values without norms and rules are empty. So this is my reaction to the question. Thank you.
So there is one or two comments? Yes.
Another thing I wanted to mention is the role of the market and of the financial market itself. Because, and it's the question of socially responsible investment, because if we ask firms to be more ethical, I mean, financial or non-financial firms to be ethical, of course we have to be ethical in the way we invest our money. So it means it's not a question of making rules for others, but of course of deciding what kind of messages we send to the market. If you buy a Bible or if you are a porn or film, you send a different message to the market. It's the same thing for stocks. So I think it's very important for the development of this kind of, let's say, management as ambitious as possible, even if it is limited, is significant because the market is very sensitive. And if there are messages, people who see that the prices of the stocks are moving in the wrong direction, it has impact. And we see that in the fact that lots of annual reports explain how virtuous the company is and so on, much more than was the case 30 years ago. So it means that they know there is this perception and that demand. But of course, we are just at the beginning. And I think the fact that we are at the beginning is a positive thing, because it means that there is plenty of upside in that direction. Well, I think it's a huge question. It's a huge question because my experience, I've seen plenty of crises in the market and so on and so on. The big crises are always crises with debt, with leverage and so on, because the domino effect is due to the accumulation of debts. Big stock market crises without debt are not so dangerous. We saw that in the US in '87 or in the new economy crisis in 2000. There was a crisis, but a limited crisis, because it was financed by equity. If you finance by debt, it becomes very dangerous. So the over-leverage is obviously, collectively, completely unresponsible. That's I completely agree on.
So, just last sentence. Yes?
Last, to react, this formulation, we buy things that we don't need with money that we don't have, and we are not happy.
Much. Do we need a better conclusion? The competition is there to change things. So you see that Ethics in Trust is launched. We have already, because it has been already on the social media informally, we have about 50 expression of interest. So please continue promoting it. You have the flyers, you can help yourself and disseminate. You have some posters also that you can use in your different institutions and so on. You have the email addresses that can be useful to get in touch and to have possibly more information. You have also the brochure of the last nominated essays that are displayed there. And on our website, you can find previous essays of the previous editions, the essays that have been nominated. What you will see that there is a lot of weak signals. In the first editions, the points were more about governance, social responsibility, microfinance. After the crisis, there were many essays about me and the culture of the bank. Starting from the previous, not the sixth, but the fifth edition, we started to have many, many essays about me and technology, the institution and technology, the customer and technology. And of course, the last, the one you won, was very much in this direction. So weak signals also where young people see ethical challenges. Corporations, and I think the three layers, macro, so the systemic level, the meso level of a single institution, and then the micro level of a person or individual somewhere in the framework where is he acting. And so I think that, well, our experience shows that even people who do not win develop their thinking simply because they have this opportunity to write shortly. I remind it's a short papers. It's about 5,000 words, so it's not dissertations. So it has to be crispy, it has to be well structured, well reasoned, and the good conclusions. So thank you very much. So help yourself with this material, and there is somewhere a cocktail, but for this we have to follow Hannah to get to the appropriate place. So thank you very much for being here, and thank you very much for our partners and the OECD for having us here. Thank you very much. So thank you.